Before I started hitting 1K a day consistently, I wasted years looking for the perfect trading system, just like you and just like 90% of traders out there. I bought courses, used countless indicators and patterns, even stared at the chart all day and really paid attention to what the price was doing, but none of it mattered. I still couldn't profit consistently and got absolutely nowhere. Then I stripped it all away. I built one system that was so simple, I honestly didn't trust it at first. It tells me, with scary accuracy, exactly when to enter and exit. And it dropped my screen time from hours to just a few minutes. I thought, there's no way this actually works. Then I backtested it, and that worked. Then I traded it, and that worked. And now I get payouts in just 2 weeks. So in this video, I'm going to break down exactly how it works from start to finish. And by the end of it, you won't even want to look at another strategy again. If you've been trading for any amount of time, you know that there are certain trades that are clean, easy, and highly profitable. And there are other trades that are difficult, exhausting, and barely make you any money, at best, and nuke your account at worst. If I wasn't spending hours on the chart, analyzing every move and taking every trade that's in my so-called strategy, I wouldn't ever make it, would I? I used to just accept this because I thought trading was supposed to be complicated and difficult. That's what everyone says, right? Well, yeah, until you actually take a second to think about it. I went back and analyzed every single clean winning trade I took, the ones that actually made me money. And I realized that they all had the same two things in common. They all happened inside a liquidity pocket, and they all had clear momentum behind them. That's all it takes for a trade to be high quality and clean. So why not only take high quality trades like that, and ignore all the other low quality trades that drag your account into the dirt and drive you insane? So that's what I did. I scrapped everything else and filtered all my trades down to a 3-step process known as the LCE model, where LCE stands for level, confirmation, and execution. This is what actually made me nail high-quality trades and got me to 1K a day, with way less time and effort than before. Now, I'm going to break it down for you step by step so you can steal it and apply it right away. Alright, so let's start with the first and most important piece of the system, which is level. This is the liquidity pocket I was talking about before. Now, the price action itself is very random and difficult to read. Trying to enter and exit trades like this is not what you want to be doing. You don't have an accurate point to enter, place your stop, or target. It all just gets very subjective. Even if you manage to get a few trades right like this, it'll be very hard to hold on to long term. Your psychology needs to be on point all the time, or you risk executing badly and over trading. And adding a bunch of indicators or drawings over it won't do much except add to the confusion. It's like slapping a band-aid on a bullet wound. We just need to know where the price is going and what levels it's attracted to. That's it. From there, we can get our targets as well as our entries and stops in a very accurate and easy to understand way. And that's how we mark out these liquidity pockets, also known as supply and demand levels. So what the price will do is move from one liquidity pocket to another. The market needs volume and liquidity to move around, so it has to move in this way. And that's great news for us, because all we need to do is decide whether the price moves to the upper level or lower level first, and then trade in that direction. Now, I've already made a video explaining precisely how to find the right levels, and you can watch that one here later. But we usually get one every 20 to 30 points on ES futures. The price typically expands in 20 to 30 point increments, and that's how we map out these level-to-level moves very accurately. So here the price is at a supply and demand level. That meets our first requirement for a high-quality trade. This one filter alone eliminates 80 to 90% of the garbage trades you'd normally take, because most losses come from chasing setups that have no structure behind them. So the first step is clear. Mark your supply and demand levels. Wait for the price to come to you, and don't touch the market until it does. Now that we've got our level, the second part is finding clear momentum behind it. We have two choices to make. The price will either move to the supply level above or the demand level below. In order to decide what direction to trade in and which level to target, we need to determine which side has clear momentum behind it. For this, we use a tool called the EMA cloud. This will closely follow price and help us get a read of the overall trend in seconds. If the cloud is sloping up, we're in an uptrend. If it's sloping down, we're in a downtrend. And if it's flat, we're in a range. That tells us which direction we should be trading in. And it also depends on the time frame. Higher time frames hold more weight because they have more long-term structure supporting them. I have the full video breaking down the EMA cloud structure, which I'll link up here so you can watch it later. But time frames like the 30-minute, 1 hour, and 2 hour are where we want to get a look at the overall cloud to decide which direction we should trade in. So on the 30-minute here, we see that the cloud is firmly sloping down. This tells us that we should be bearish and look for shorts, right? Higher time frame trend and momentum is pointing lower. Now, if we go back to the 5-minute, we also want the cloud to be bearish. This will confirm that short-term momentum is also bearish, and we can go ahead and take the trade with very high certainty. This is what's required for a trade to have clean momentum behind it. If the cloud was flat or bullish on a higher time frame and we were right at cloud support, then this wouldn't be a good trade idea because momentum is conflicting on different time frames. And that means we don't know whether the trade is more likely to move to the level above or below. It's not decisive to either side. We want a general agreement of cloud direction on all time frames for a trade to move in one direction. So now we have our entry, target, and structure in place. And we also have clear momentum telling us which direction to trade in. That's all we need for a high-quality trade to play out. All we need to do now is execute it. You typically execute on the 5-minute, but I'm going to show you on the 1-minute so you can see it in even more detail. Our first opening candle at 9:30 here is an incredibly aggressive drop. Since we're already bearish, this is just extra confirmation of momentum in our direction. So here we're going to enter short with our stop above this high and our target at the next demand level. Now, the entry itself doesn't matter all that much. I mean, sure, you can enter a bit earlier and get a better risk reward on your trade, but ultimately, it won't make much of a difference. You just generally want to enter when price is at this level and generally exit when price is at the next level. Just try your best to get a good entry. We already have market structure and momentum in our direction, so you'll get it right, regardless of where you enter. And once I'm in, I don't babysit the trade. The best thing you can do is close your laptop or monitor and come back later. The market will either hit your stop or target, and that's it. Just accept that and let it play out. If you stare at the price, you'll start messing with it and ruin your execution. So if I was looking at your execution chart, I would just want to see 2 points, entry and exit. No other trades or moves in between. So let's see what happens here. We got a quick, aggressive drop into demand. We had clean momentum and a clear level to target. That's one level-to-level trade complete. That's execution. It removes all the overthinking, all the panic clicks, and all the second guessing that ruins most traders. You've already done the work with level and confirmation. Execution is just pressing the button and letting probability play out. And that's the beauty of the LCE model. It doesn't just give you trades, it gives you a system that keeps you consistent no matter what the market throws at you. So now you've seen it. It's not complicated and it's not flashy, but that's exactly why it works. Put together, it's the difference between being stuck in break-even jail for months and running a system that pays you again and again. This exact model is what I used to scale my trading to 1K days without needing to be stuck for hours on the charts. Now, I know some will watch this, nod along, and then keep doing what they've always done. But the ones who actually apply this seriously, they grow fast. If you're serious about scaling to real income, the kind where 1K days aren't a dream but a routine, that's exactly what I help traders do inside my mentorship. I put together a quick video that explains how it works. Hit the link below, watch it, and if it's the right fit, you'll know exactly what to do next. Either way, make sure to drop a like, hit subscribe, and turn on notifications, because I've got a lot more coming that'll help you grow your account the right way. See you in the next one.